All of us are salivating at the thought of $40 silver. So should we even talk about $50 silver? Well, according to one analyst, yes, we should, because we're literally about $4 away from what should be with silver's price, and what the catalyst will be for it to climb to that level. Let's talk about it as we explore. $50 silver seems like a pipe dream for most of us out there, but there's a lot of people who believe that we're right around the corner to this $50 silver mark, which would be the third time that we would have seen this happen. Of course, $50 in 2025 is a whole lot different than $50 in 2011, and is worlds apart compared to what it was back in 1980 when it reached that price. But this time, there's a couple of catalysts that need to happen. The first one I alluded to in my opening, and that is a $4 gain in gold's price. That's right. In fact, right now, it's about $4.60 away from $3,400, which is very close to its all-time high, about $100 away from that. But according to a piece here from Kitco, well, $3,400 gold means silver of $50 per ounce. And there's still a lot of upside for silver, according to an analyst here. Before we dive deeper into that, I want to remind you of channel sponsor Summit Metals, a great company that has excellent customer service, fast shipping, and a wider selection now than ever before on their site. So check them out at summitmetals.com. Now, that's the first thing. Gold at $3,400 is one of the catalysts that could see. But this other thing needs to happen first, I think, before we see it, according to what they say. Now, stay tuned for the end of the video where I tell you if I agree with this analysis or not. Although silver has been unable to sustain gains above $40 an ounce, one fund manager says that the precious metal has undeniable momentum, which could push prices back to their 2011 record highs. In an interview with Kitco News, Nate Miller, who's the vice president of product development at Amplify ETFs, said that surging investment demand for silver has fueled significant growth. Amplify's Junior Silver Miners ETF has nearly doubled in size, with assets under management now valued at roughly $1.8 billion. Now, that's very different than the actual physical accumulation of silver. We're not quite seeing as much of a run on that yet. And in fact, there's been a whole lot more selling than there has been buying. The firm has also added another ETF to its lineup, and that's the Amplify SILJ, and which invests in call options on a portfolio of junior silver mining companies. And so that is something that they're looking at there. If they're going to be expanding some of their digital offerings or exchange-traded funds, well, it means there might be something to some of this happening. The launch of these new options for ETFs comes as silver has posted significant gains, with prices up more than 30% so far this year. That is big, folks. That is far outperforming inflation by any and every measure for this year. In fact, a little word of warning for those of you who are new to stacking, and I can't tell you how many times I've seen people come on the channel and say, hey, I've only been stacking for a few months, and I just started back in January of this year, or I started late in 2024. Folks, this is an unusual market for silver. It doesn't usually do this. This is not the norm. In fact, the best thing we can really hope for, even now, I'm telling my viewers, is to not get your hopes up too much with silver. Understand what it has done in the past and what it will do in the future, and that is preserve your wealth, because it is indeed money. Commodity money is recognized these days, or dormant money, as I like to call it as well, too. It doesn't trade as a currency, but it is a monetary metal. But of course, there's other reasons why, too, we're seeing a rise this year. But remember, pullbacks are healthy, and we still may see some of that, and we are witnessing that to some degree today, even though silver really is holding its own right now. In recent months, silver has also managed to outperform gold, with the gold-to-silver ratio currently trading above 88, and that's down from April's highs at about 104. But remember, 88 is still very, very high. and unusually high, and it is still out of the norm. What is the norm for gold-silver ratio? Well, according to one analyst, over the past 10 years, it's been about 80. And I would like to say and think that, over the last 10, 15 years, it's probably been in the 70s. But most think that it should be in the 60s and maybe even less than that. When it got up to $50 an ounce in 2011 or near there, the gold to silver ratio was about 33 or 32 to 1. That's unusual too. But silver has rallied this year, and we think it still has more room to move, Miller said. We continue to see two key factors providing strong tailwinds for silver this year. Miller noted that silver is benefiting both as an industrial metal and as a monetary metal. And that's the fundamentals of what silver has been for a long time, for sure. He explained that the global green energy transition is driving demand for solar energy, with silver remaining a critical element in photovoltaic solar panels. In fact, it has become so critical that even the USGS has proposed adding silver to its critical minerals list, a topic I covered a few days ago on this channel with a video titled, this is the most, probably the biggest silver news ever. So I hope you will check that out if you haven't seen it already. According to estimates from the Silver Institute, the solar sector is expected to consume a record 140 million ounces of silver this year. Miller added that the electrification of the U.S. economy, along with growing demand for new data centers and AI, should create long-term demand for silver. That's right. In electric vehicles, AI, data centers, military applications, and the list goes on and on. With over 10,000 uses for the metal, it is the most diverse metal on the periodic table. No other metal comes close. It's pretty remarkable and amazing feat of itself. So it has a lot more value, I think, than what the price marks it for, which is why I always tell folks, hey, you got to look at the difference between price and value. So I'm proud to hold the silver that I have, and some of the silver that you see here has been bought a long time ago when it was much cheaper. Others when it was a little bit more expensive as well. So there's a variety of prices you can pay, as well as there is a variety of different types of silver you can purchase as well. Pretty amazing. But nonetheless, at the same time, growing economic uncertainty and the ongoing global trade war are pushing inflationary pressures higher. Well, a trade war doesn't cause inflation. We know that. We've talked about that ad nauseum on this channel. But he said he has renewed investment demand for silver as investors look to preserve their purchasing power. Silver has intrinsic value that investors are starting to recognize, and we don't see that shifting away anytime soon, Miller said. And that intrinsic value is something that extends beyond price. He also pointed to bullish technical factors, noting that the gold to silver ratio remains elevated compared to the historic average. In other words, long course of history at around 65 to 1. But again, the last 10 years has been much higher, around 80. If the ratio were to normalize, assuming the price of gold stays where it is, silver would have to be around $50 to $52 an ounce, he said. Even with the current rally, we still see tremendous upside to silver. Well, there's my first little disagreement with him because, again, looking back over the past 10 years, it has been much higher than 65. We're at a new normal, I think, for the gold to silver ratio, and it is higher than that historic average. In fact, I really don't think you can use that just as you can't use the mining ratio or previous fixed ratios like 15 to 1 or 16 to 1 or the mining ratios of 7 to 9 to 1. In a separate interview with Kitco, Christian Magoon, CEO of Amplify, said it's an exciting time to be watching silver as the price hovers at critical resistance levels. If the price can get above $39 an ounce, we'll get to see what true price discovery looks like. That's the other factor. That's the thing that has to happen first. $39 is a strong psychological number, but guess what? $40 is an even bigger psychological number. And I'm telling you what, he thinks that the Miller's new silver options ETF offers an exciting opportunity because it provides investors with a yield on a traditionally non-yielding precious metal. But because of silver's rally this year, investors are looking at it and searching for a reason to buy. But they often can't justify it because there's no yield. So that's one of the offerings there. So in a sense, I think he's kind of saying that, hey, buy our ETF, our new ETF offering, because once the price hits $39 an ounce, then true price discovery will take effect, and that's $50 an ounce. So that logic is a little bit twisted, I think, to sell an ETF. In my view, I could be wrong on that, but the thing is that I think $40 is really the critical number. So that's where I disagree with him, number one. The number two area where I disagree with him is this, that $40 does not necessarily mean it's going to get up to $50 anytime soon. There's no magic theory other than the 45-year cup and handle chart. And also, what other things are going to be working against silver, much like what we have been seeing as it's been hovering in this area for a long enough time, that there is resistance. There's strong resistance. And yes, some of the long positions that I've talked about in prior videos are there and are encouraging. Silver is likely not to fall too much from where it is now. But remember, the road to $50 is going to be a long, hard one in my view. There's going to be a lot of resistance there. But again, the road from $30 to $39 has not been as resistant as I thought it would be either. So I'm also open-minded to that possibility. But I think the higher we go, the more resistance we're going to see. And that may not be a bad thing, because that's the natural market, as well as maybe even some people think the suppressive market, working in full force to try to see what's happening here with the metals and that complex as it moves up there. It's solidifying support. And the solidification of support is much more, I think, valuable than crushing through resistance in spurts and wild gesticulation of the markets. We don't want that. And so I think this is a good sign, and we'll see there. So I don't see $50 happening anytime soon, but that's just my feeling. Let me know what your thoughts are. I like to give you the latest news and analysis in the world of precious metals. If you enjoy what I do here, press that thumbs up button down below and share this video, as well as hit the notifications bell that you can be notified of the latest video that makes its way across your device. And I want to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, and yes, subscribe if you've not done so already. Subscribe!